Hi, good evening. Today is Monday, January 25th. An interesting day in the markets indeed. S&P 500 sold off 60 points in 20 minutes, but recovered it all and managed to close plus 13 points at all new time high close. And of course, the SOGI 50 level was at play. Nasdaq also sold off in the middle of the day rapidly over 350 points, but closed up 100 points, also all new time high close. And there are multiple rumors why the sell-off occurred so rapidly, but one of the theories is that it has to do something with Melvin Capital liquidation and probably some others. I'm sure everybody is aware about the absolute insanity happening right now with the most shorted names. For example, Fizz, which is a beverage company, was up as much as 40% at the high of the day, closed plus 13. BB, which is a BlackBerry company, up over 40% at the high of the day, closed plus 28. AMC, which is a bankrupt movie theater company, was up around 40% at the top of the day and closed plus 25. I'm not sure what's the special thing about 40%, but there seems to be lots of stocks kept going up today at 40%. Bed Bath & Beyond, another close to bankruptcy company, was up 56%, yet managed to close unchanged. So, and of course, GME, the gaming stock, was halted today about 10 times on volatility and closed at, well, it was closed yesterday at 65. It was high today as high as 159, which is basically up 165% since yesterday's close. It actually went negative on the day today and was low at 60. So it's a 100-point range day and still managed to close up 18 at 76. So this kind of crazy volatility that's going on in very highly shorted names is basically gives speculation to people that Robinhood traders have won. It's some sort of, to quote somebody on Twitter, proletarian revolution in the markets, or the true way to occupy Wall Street movement. And the rumors are that Melvin was one of the people who was short GME, Melvin Capital. It was down 30% as of Friday close, nobody exactly knows. And today it was bailed out by Citadel on 0.72, who invested 2.7 billion into it. So perhaps Melvin or other people who were short all of those stocks and squeezed by Robinhood didn't want to sell or cover rather their short positions. So instead they sold the market to try to break the retail fever in all of those stocks. So all this short squeezing madness is going on, and people are piling in Robinhood and Wall Street Bets, which is another blog on Reddit. And I only imagine what would happen today if Tesla's short was not so low and it wasn't part of S&P 500. I can only imagine how high it would have been squeezed. And on a slightly different note, bonds were up today, perhaps because the expectations have finally caught up with reality and nobody expects the stimulus anytime soon, especially because the impeachment is rolling into Senate next week and it's going to take some time. So now the expectations are moving to March for the stimulus package to pass. And who knows when in reality this will happen. Bitcoin is still in the range at 33, nothing happening there. So that's it for my summary. Victor, what do you make of all this short squeezing crazy madness that's going on when the retail Robinhooders are squeezing short hedge funds out of their positions?
Well, I think you have to turn to ecology, and the sine qua non there, the start of ecology, were the results of the various cubby holes and little niches and hideaways of the California thrasher. And it's a bird that doesn't fly. It sort of rummages around underground, eats anything, and then hides around in the brush. A man named Grinnell was the first to look at the niches that various animals have. And they define niches as they look at the environment in which an animal grows, in which that's the second way. The first way is in where he hides, and the third way is how much resources he takes. Now, we're in a very unusual niche of the market. And we have to take that into consideration. Everything is up.
Mm-hmm.
It's a Baron Coleman kind of market. The grains are up 100% from where they've been for the last 5 years. The Nikkei is approaching 30,000, inevitably moving higher and higher. The stock market's continuing its 40% of all days that it sets a new high. And during a niche like that, one should look at what's happened. Now, obviously, there's a lot of firepower, there's a lot of wealth, and that wealth is deployed in various individual stocks. The idea of being short in a market like this is very dysfunctional because there's so much wealth, there's so much. What most people don't realize is that a bull market can be as exuberant and as unusually momentous and go higher and higher the same way a bear market does. I mean, everybody talks about how when a bear market gets down, the market can go down like in 1987 or in 2008, it can go down 20, 30%. In 87, it went down a third in a day. The same thing can happen on the upside. I've always said that the bull market won't be over until the last short has gone belly up. And I think we're seeing that. The idea that someone would be short in this market is very foolish, that one would try to go against all of the stocks that are going up the most. We've shared some studies that show that the stocks that go up the most tend to continue going up the most. And with Bitcoin back up to the $34,000 level, as Partridge said, we're in a bull market, and we're in a bull market for everything. The sauce or the sugar is up, the cotton is up, all the grains are up. I wouldn't say that the bonds were rationally up. They went up to about the middle of the range, to the 170, close at 170, and Vortex up from 168.5, so they were up 1.5 points. That's the irrational market. That's the market that's crazy, because We're in inflationary times. Everything is up. The prices of all agricultural commodities are going to are way up. That's what the futures are telling us. It's going to create tremendous increase in food prices. And crude is at a 6-month high. So the Fed is meeting on Wednesday. Now they have two fellow travelers. They have Jay Powell, who knows nothing about economics, and the agrarian economist, Janet Yellen, who's going to be Secretary of the Treasury. The two of them, I like to say, should have a meeting at Camp Kinsella. However, normally you would expect the Fed to take some quieting action to reduce inflationary expectations. They're scheduled to meet on Wednesday. I wouldn't be surprised if there was a muted call for reducing inflationary expectations.
Mm-hmm.
If we didn't have two fellow travelers there, we'd have a very strong action by the Fed to reduce inflationary expectations. So I'd be very careful with the market on Wednesday, especially the last Fed meeting was very bullish. And in general, there's a tremendous negative serial correlation between Fed meetings. I think the 60-point drop, it reminded me of the, that's, you take the moves today, take the 15-minute moves, and it comes to more than 4 or 5%. It comes to more than a half of the total expectation of the stock market move in a year. So there was certainly a lot of opportunity today, and a lot of times when you have a flash crash like that, by 2% in 15 minutes. Usually it turns out there's a reason for it. And that reason might have been on a need-to-know basis, the Fed sharing what it's going to do on Wednesday. And of course, they apparently, I haven't seen any talk about a transition in the Fed, taking away all the old governors and replacing them with Biden's governors, but apparently they want to stay. But still, they probably have some semblance of trying to do the job, which is to reduce inflation. I mean, of course, the way the ignoramuses calculate inflation, they say, forget about any markets like oil and food. Those are very ephemeral. They don't affect inflation. And there was probably a study that was done about 10 years ago that showed that you could predict inflation better by not taking into account current food and oil prices, but that's a ridiculous study. I mean, the future prices are the best estimate of where where they're going to be. So there'll be some governors who are true to their mantra and won't be currying favor with the current administration. And so I'd be very careful about a counter move on Wednesday. And I think what happened today is an example of what can happen in the future. Now, of course, as usual, the infrastructure made a lot of money. The market overnight was in that same range of 38.40 to 38.50. It had only a 10-point range, so again, everybody was
Right.
thinking that that would be great to put in a buy limit order below the 38.40 level and sell limit order above the 38.50. And it was interesting, the SOGI number was in play often today. It was, with this 6% move of the 15-minute prices, it broke the SOGI number 3 or 4 times. It broke it at 5 minutes before the close, and it broke it 10 minutes before the 60-point decline. So what do we have here? We have in this niche, we have options activity at an all-time high. We have new traders coming in from Robinhood at an unprecedented level. We have the special purpose vehicles adding to the bank's profits and creating the bulk of it. And in general, we have the public becoming accustomed to government bailouts. And I saw the explanation of the 60-point flash crash as a delayed prediction as to when we would have the stimulus. Now that is the craziest thing in the world. What difference does it make if we have the stimulus tomorrow or if we have the stimulus in 1 month? The stimulus is the meme that doesn't stop giving. And there's been about 50 times that the market has plummeted 20 points, 30 points on a delay in the stimulus date, and then within 10 minutes or within a day, it comes back. So we're in a niche where negative news can have a big impact. We're in a bull market and everything. We have a love fest with the new administration. Even the New York Times was embarrassed by it. One of their reporters said she got a chill when she saw the president's plane, and apparently I presume that the New York Times doesn't like talk of an orgasm in terms of their reporters' desire and love for an administration, so they fired her. The whole thing is topsy-turvy. But we have a tremendous reliance on the government. Everybody is accustomed to it. And as soon as that reliance turns out to be dissipated and is shown to be ineffective, dysfunctional, we'll have a reversal. So I'm not predicting for tomorrow, but I'm happy with it. But I'll be very careful with the Federal Open Market meeting on Wednesday. You know? And a lot of times, the market on Monday will go opposite from the employment number. So do we have an employment number? No, the employment number will come in February. But often if you could make money by buying the market the first day of the week, and then it would keep going up, then the infrastructure would not make their accustomed remuneration at the expense of the public. So the strong would not be taking as much money from the rich. But of course, that has to be tested. Okay, what's new on the science front?
Well, like you said, the media is praising Biden for all of his accomplishments, even though nothing happened yet. CNN already removed the death tracker from their TV news program from the main page. And the New York Times also has reported a 33% decline in new cases in the past 2 weeks. So they're all trying to calm the people down while multiple states are reopening. For example, Cuomo wants to reopen. Washington, D.C. resumes indoor dining. Maryland reopens schools. Michigan reopens restaurants. Chicago wants to reopen.
Excuse me.
Yeah.
This is guaranteed to happen. We said that. Everybody was holding their fire until Trump was defeated.
Right. And
now there's no reason to devastate businesses and to devastate
the tax revenue that they're losing as well for the states.
Well, they don't seem to care about that because they feel they're going to, in the stimulus bill, they're going to bail out. But I noticed that Dr. Cattle was a little bit behind the trends. He's recommending a double mask now.
I don't see why not triple, quadruple. Why? Stop breathing altogether. Just kill yourselves. It's just crazy. It just nothing makes sense anymore in this world. And Fauci himself now says that he's not even sure if vaccine is working for the new strain of the virus. Meanwhile, Biden is trying to close the country at the same time as all of the states within America is reopening. California lifts their stay-at-home order. Somehow Biden thinks that the virus is worse and is trying to close the flights coming in from South Africa, from UK, Ireland, Brazil. So it's a bit of a disconnect between what the states are doing and what Biden is doing.
Well, what is the ending purpose of this? Is to get the people accustomed to government help, to reduce the independence of the individual, and
to get the states bailouts, to bail out the progressive states, which couldn't do it on their own. So now they have an excuse why they need to be bailed out.
Reliance on government. That's That's what all this is designed to show. Forcible actions by governments. But in any case,
Meanwhile, you could see that the peak of COVID coincides with the peak of pretty much any flu season, which is about, you could see on the chart, is about January 11th. And so it was inevitable. Another reason it was inevitable for Biden to cases to go down because of seasonality. But of course, now Biden gonna claim that he's also responsible for that. Here's another one. All of the major states compared hospitalizations. You could see that regardless of the state, whether it's Florida that was open or California that was closed, the peak in hospitalizations also occurs right about January 11th, which is exactly the peak of flu. And so there is not much difference really between the states as far as open and closed. It's the weather, it's the season that matters because it's still a virus that still follows the traditional virus pathways as far as the replication. And here is another one. Currently hospitalized COVID patients. You could also see the actual peak, but this is 2 weeks moved, like the extent. And so based on all of this, between the natural immunity that's being developed and the peak hospitalization happening, it doesn't even matter. Vaccines don't even matter as much now because it's going to become like normal influenza virus as soon as humans adapt to it. And that was another inevitability for Biden to claim as victory.
all right, well, we'll see if the rub fest continues for a few days, but be wary of the niche that the market is in with everything up. As I've said before, one should never short because you're fighting a 50,000-fold a century drift.
Well, now in addition, you're fighting the Robinhood crowd who specifically attacks the companies that are being short. And I wonder, and I think at some point there will be some regulation towards that, because while it technically is still illegal to do what they do, you cannot conspire to short security. No, you can conspire to do the same thing as they did to the GameStop today, to squeeze the shorts out. Both of them are illegal, yet they're openly calling for that in the blogs. And now that it's commission free and it's much easier to organize due to all of the social media, we are experiencing something unprecedented. I'm pretty sure this has never been done before in history, because the retail Robinhood traders now can organize and have access to tremendous leverage and free money because of the stimulus that they could just throw around and squeeze the hedge funds. So
I think it's been done before. Stocks were going wild in the 1870s and right after the utilization of the telegraph. They were doing this in 1925, 6, 7.
Well, they didn't have options.
And they were doing it in 1999. So I think all the complaints about, I'd be very surprised if the high frequency firms have not taken their usual bite out of the market. And I'm sure that during that 60-point decline, a lot of the customers got margin calls and were liquidated. And the strong will always find a way to take chips from the weak, the members of the exchange, the banks with unlimited capital, and the high frequency traders, the infrastructure. And they will complain, you know, they complain like they do about spoofing whenever anyone tries to possibly reduce the edge that the high frequency boys have. They claim it's illegal, and now they're claiming it's illegal for the public to be making money. But I think they'll eventually, there'll be tremendous loss of all the public money, and it will go to the strong top feeders in the market. So I wouldn't pay too much attention to all the complaints about the public making money. They will lose it in order. Let us hope that we don't join them in this room. All right, until tomorrow, thank you very much for all that information about the pandemic.